Let's talk Tesla. It's been a minute. We've done some big, deep analysis on the channel. A lot of folks wondering, Kevin, what's the catalyst now to get through 318? We've now, for the second time, bounced off of 295, thanks to Elon pooping on Donald Trump. But we have a host of good catalysts on the horizon for Tesla. The question is, are those catalysts actually going to lead the stock to go up? So first and foremost, the first thing that I think is a big catalyst is that this big, beautiful bill is going to pass. In my opinion, that's actually great. Why? Because Elon can stop pooping on the fact that this bill is going to happen and it's going to increase the debt. Elon's not wrong. Yes, we should try to constrain the debt, but deficit spending can lead to economic growth. And frankly, if you need something to be bullish about, not only for Tesla stock, but also broadly, Tax Foundation suggests that starting in 2026, our GDP will be 1.2 percentage points higher because of the deficit spending in the big, beautiful bill. So regardless of what we think about the debt, the reality is we're basically borrowing from the future to give to the present, and we're boosting our economy at a pretty sensitive time in the economy. So that, combined with once the BBB passes, Elon's negativity towards Trump may wane because Elon will no longer have something to really complain about with Trump. That's probably a bullish catalyst, or as we like to say in the accent,
bullish catalyst.
Exactly. So BBB passing is actually a positive catalyst for Tesla. Right? This is great. But in addition to that, we've got a few other things that are positive catalysts. In the near term, the September 30th EV credit expiration of 7,500 may be a
bullish catalyst.
Rationale here being you get some reason to sort of rush in and buy a new Tesla before the expiration of the $7,500 credit, especially since the Cybertruck is now included. See, I actually got the Cybertruck before the $7,500 credit was included, but right now you could get a $7,500 credit on the Cybertruck, which is kind of cool. So to me, this actually creates a pretty nice catalyst for July, August, September sales for Tesla. So Q3 could actually get a nice little EV boost here because of this EV credit expiration here. On top of that, you have a Q4, December 31st, residential energy credit expiration. So this is going to be that 30% in the big beautiful bill, well, in the Inflation Reduction Act and previous acts, where basically you get 30% that you can take as a tax credit when you invest in home solar or home energy. A lot of these residential energy credits expire December 31st. So I think that creates some pull forward as well for people to get their home energy storage batteries or their solar systems. Though that's also questionable just because there are a lot of homes that also have natural gas lines that could benefit from just using a Generac generator. I personally think, while I recognize Generac generators don't serve the same purpose as a battery, for backup purposes, you don't have this sort of like home range anxiety with a natural gas generator as you do with a battery, because the battery, you're waiting for that 4 hours of usable solar that you're getting on a regular basis. That's the average, right? Generally, solar panels are rated for about 4 to 4.5 hours of like good energy deployment per day. When you spread it out over the year, that makes up for cloudy days as well. Yes, I realize there are many days we have more than 4 hours of light. I get it. But functional direct energy solar, it's usually rated from 4 to 4.5 hours. You could look it up. But anyway, what's interesting is batteries also help you reduce your higher peak hour energy usage. So if you fill up your batteries with the sun around 10, 11, 12, 1 p.m., 2 p.m., and then you utilize that energy in some of those higher, more expensive energy periods like 4, 5, 6, 7 p.m., those are usually great opportunities for you to use your batteries and offset some of the energy you'd otherwise be using. And I think if people make these calculations, they might see, okay, if that credit's going to go away, could be a good opportunity to buy some Tesla solar walls, the batteries, the power walls, as well as solar panels before the end of the year. I'm a big fan of solar and batteries, and if I really wanted to be sort of off-grid, I'd probably be solar, batteries, and natural gas, right? I'd be in a combination. Of course, technically using natural gas, you're still on the grid unless you are using propane. But anyway, that's sort of just a more side comment. So I think these are actually three really good catalysts here in the short term. But there's some other catalysts as well, some of them not so great, some of them more hopeful. And so let's talk about those. The first would be the Model Q. So this is this talk about potentially this newer Model 2-ish, lower priced car that, you know, there have been so many rumors, Les Barons is talking about here, that we're going to get a Model 2 or a lower cost Tesla, but we haven't seen it. We haven't, you know, there's been a rumor we'll get like a two-door version of a Tesla or a hatchback, although two-door versions of cars aren't really that popular in America. And Elon has really dumped on the idea of a $25,000 car. So I'm probably going to put this as a maybe catalyst. We could call it, you know, maybe we'll get that sort of Model Q. A newer, less expensive vehicle would be a huge positive catalyst for Tesla. Would be really, really exciting. So you've got a few things that could really help us here. The BBB passing, the Q3 pull forward on the electric vehicles, the Q4 pull forward, and then of course the potential for Model 2, though I think this is less likely. These are good for positive catalysts. And then, of course, we have excitement over Robotaxi and Optimus, but these are more, I'd call them hype right now. And that's not to be negative on them in the future. It's just to be patient and realize that they're just more of in a hype cycle right now. The idea about this sort of like write-off interest on car in 2026, thanks to the BBB, I don't actually see this as that useful, mostly because when you go to Tesla.com, most of the cars they pitch indicate 0% financing anyway. See 0% APR with FSD, the Cybertruck. This is actually a little hard to read. You really, to benefit most from this, you actually ironically want a higher interest rate. So most people seem to buy and finance vehicles when they have the promotions, which they don't always. See right here, you've got a 5.4 APR, which that helps. I mean, if you put $4,000 down and you finance this vehicle, you're financing, let's see, cash, you're gonna finance, call it $40-ish thousand with your taxes and stuff that you'll finance. $40,000 will not amortize for a moment. It'll just make our numbers look a little higher anyway. So we'll go with a $40,000 loan quickly and just do a quick little 0.554 interest rate, which rates might come down. That'd be about $2,200 of savings if you buy this in 2026 and it qualifies for the American-made car loan interest rate deduction. You're not using this for business, just personal write-off. That might save you somewhere around $600-700 in actual cash, which is like 1/10 of the benefit you would get from the $7,500 credit. So unfortunately, you know, to me, this is about 1/10 as valuable as the $7,500 credit. Like the $7,500 tax credit is a huge
bullish catalyst.
But once that $7,500 credit goes away, going into like the fourth quarter and next year, unfortunately, it becomes a negative catalyst. If you own rental property and haven't yet started using Turbo Tenant, you might be leaving some money on the table and adding way too much stress to your life. Between chasing rent, screening tenants, and managing leases, it's a mess if you don't have the right tools. And that's why Turbo Tenant is so excited to partner with us with an all-in-one platform that lets you self-manage your rentals without a property manager. You can advertise your unit on Redfin, Apartments.com, and more seamlessly. You can collect and screen tenant applications with full credit, background, and eviction reports. You can send custom leases, get them signed digitally. You can automate rent collection with even reminders, receipts, late fees built right in, and even track income and expenses. So come tax season, it's just not buried in spreadsheets anymore. And yes, it even helps you track your income and expenses for tax time on more clunky spreadsheets. It's free to start, and the premium plan is only $149 per year for unlimited properties. Most platforms charge per door and still don't offer half the features, so it's no wonder why 750,000 landlords trust Turbo Tenant. And the best part is you can try it for free as long as you want until you decide you want to upgrade to the premium plan, which only runs $149 a year for unlimited leases and properties. So if you want full control, more cash flow, and less headache, This is a no-brainer. So the death of the $7,500 credit is not great because we are competing with, well, frankly, non-electric vehicles. I hate to say it, but we're past that initial adoption of enthusiasts for EVs. Now we've really got to expand to, ideally, like my opinion for the Tesla market, you really want to kick the butt of the Toyota buyer. You know, you want to get that buyer that's looking for low maintenance, which Tesla is, highly reliable vehicle, and competing with your Toyota, style purchasers. This is critical. Which, I mean, frankly, plug-in hybrid over here for $33,000. I mean, I'd rather have a Tesla personally. $28,000 for the Prius. I mean, that's good, but it's still starting at $28,000. I mean, I remember, 15, 16 years ago, these were starting at like $18,000. That was the starting price, right? And then obviously you trim up from there. But this is the kind of person you really want to attract to Tesla. And so my hope is that, by losing the $7,500 credit, we could find another way to become competitive to them. One of the ways that you can become competitive is, and I'll call this another bullish catalyst, is Elon getting out of politics. So I think that's another bullish catalyst, and that hopefully then can start attracting some of those Toyota-style buyers. That's important. But the other negative to think about is slow Optimus deployment. So this is a big deal as well. We can actually see, I've got a few things saved right here about Tesla and Optimus. So apparently the Optimus is sort of revamping how they're building their Optimus robot, which is fine. I don't see that as a negative catalyst. There's a lot of sort of drama about how information from Chinese supply chain sources indicate that Tesla is currently focused on adjusting hardware and software details, delaying some parts procurement for about a month to 2 months. I don't really think that's a big deal. I think you should always be increasing, your prototypes essentially until you're ready to go to mass market, which we're nowhere near ready to go to mass market. I think a larger concern is actually the following, and this relates to an MIT sort of piece on humanoid robotics. So listen to this. According to Tesla's feedback to suppliers, Optimus still faces hardware challenges, including overheating in some motor joints, low load capacity in the dexterous hands, short lifespan of transmission components, and limited battery life. All right, so I want you to think about this for a moment. When we think about short lifespan and transmission components, I'm way oversimplifying here because we think about like gears and cogs, right? But think about, for example, the joint on an Apple, AirPod case, okay? So just a normal case. Think about this joint. This joint needs to be able to open and close, 10,000 times before it starts getting rickety-dickety and cracks or whatever. But that's also predicated on a human using, like, opening, closing this, like, what? At most 10 times a day, maybe, right? Depending on the usage, 20 times a day. But with a humanoid robotic, what you're really doing is you're moving each of your sort of actuators or your hands or joints or gears constantly. And the idea is you're supposed to be able to do that 24/7 to replace the work of a human. 24/7. All those gears are operating all of the time. The battery, you're better off honestly just plugging the damn thing in. I actually think that's what you should do, is you should just not worry about damn batteries in these Optimus robots. Plug them in, have like a power cable that sticks in their head so other people don't trip over it, and it just goes up to some kind of like guide wire up top. And then you don't have to worry about these stupid battery lives. But, then you still have to worry about like overheating in joint motors, and then also the ability of like, hey, yeah, it's cool to see the Optimus pick up like a tennis ball or, something smaller, but can you actually do this with heavier objects like boxes of batteries or whatever? Well, we'll see. So these are all kind of things that could somewhat delay some of our long-term hope for Optimus robots or just humanoid robots in general. On the software side, Tesla may use more synthetic data to train robot models. I don't love hearing more synthetic data. I think you need more real-world data, but whatever. They talk a little bit about here, Optimus is currently only used for moving batteries, and that's why they're running into some of the problems, right? With efficiency less than half of that of human workers. So obviously it's early days, but it's somewhat of a problem, right? If your robots are breaking down, they're half as good as humans. There's still a lot of work to do here. And this isn't to say that humanoid robotics don't have a long-term future. I certainly think they do. But one of the problems that I look at is really what MIT says, which I think is very interesting. Humanoids are mostly not intelligent. They just basically give some examples here of how they're very A-B, but that's fine. I'm not so worried about that. I don't really need my robot to be intelligent. I don't really care that my robot can talk to me like Grok. My phone can do that. I just need a robot to be able to be programmed to do, one task 10,000 times a day, right? And so MIT, though, they come up with this argument, though, that one of the downsides you have with humanoid robots is the stronger you make them and the longer the battery lasts, the heavier they are, and the more they are likely to break down. This is why I actually think you just shouldn't have battery versions, at least in the early days. They also then suggest that the adoption of humanoid robotics is likely to be really drawn out and slow, which is a negative catalyst if that ends up being true. For example, while NVIDIA's Jensen Huang says that physical AI is the future, like humanoid robots or whatever, they make this argument that it took 50 years to get from the first robotic arm to the 1 millionth robotic arm. And that's actually why, one of the reasons I was talking this morning in the Meet Kevin Alpha report, which you pay one time for and you get lifetime access to it at meetkevin.com. But one of the things I was talking about this morning was Symbotic. And this morning, right around here is where I put out my Alpha report, which is right here at that 42.98 line. And we were talking bullishly on how Symbotic could make a nice move today. Obviously, today it made a fantastic move. It skyrocketed from literally my 42.98 line all the way up to a close up 13.5%, basically straight up all day long. It's, I guess, more like a parabola or whatever we want to call it here. But almost to $48, which is really remarkable. And what I find so interesting about this company is it's a robotics company that's more sort of purpose-built. So rather than this idea of like, hey, a humanoid robot that's going to go around and do everything, this sort of like general purpose robotic, it's just a more manufacturing company or warehouse enabling company, I should say, that enables robots inside of factories, whether they're robotic arms that can do repetitive tasks, that don't require batteries, that don't require all these smaller servos or whatever to act like a human. Instead, they're made for their purpose. They do it in the position over and over again. Or you get these right here. Let me show you these right here. These are your sort of like autonomous AI-powered robots that are basically just forklifts, but they're on rails and they just autonomously move around and do their job. Like this, I think, is smart. This is purpose-built robotics. We're trying to replace workers in a factory, so we're going to build a robot that does that job the best. We don't need legs on this because we can put it on rails. It doesn't need to walk off the assembly line because it doesn't need to go home and go to bed. So it doesn't need legs. And so you remove, here's some more of it, you remove some of the complexity involved in smaller robots with these, sort of ancillary components that aren't really necessary. So it's one of the reasons I've been pretty excited about Symbotic. That's not to say that I'm not excited about Tesla. That said, the information makes a fair point here. It will be a long time before robotaxi fares can offset a decline and ensure the company starts growing again. I agree with this. And it's one of the reasons why I think one of the most bullish things that you could really have here would be the Model 2. Now, while I think this is really only, 20 to 30% likely, I would actually say it would be the most bullish potential catalyst because it maybe opens up the Tesla market to more buyers, and it also gets that revenue cycle going again. I mean, there's talk, revenue growth especially, there's talk about the Cybertruck potentially getting discontinued because sales are so low, which is really sad because I think it's a fantastic and wonderful car, but I also recognize that it's not everybody's cup of tea. It's a little bit more of a unique vehicle. It feels like a spaceship on the inside. I've had no problems, knock on wood, with our Cybertruck, and we love it. The kids love it, and people really I mean, it certainly attracts attention, some of it positive, some of it negative. But here's another issue we're finding with humanoids is the Figure AI drama of the last 2 months. That basically Figure AI raised money at like a $40 billion valuation, and so everybody was freaking out because this company with a $40 billion valuation in the private market says they have a robot working at BMW, but then a tech correspondent from Fortune reached out to BMW, and BMW said that there's only one humanoid robot working, and it's not even working during production hours. The Wall Street Journal followed up, and then all of a sudden there were 3 robots working, some during production hours and some not, but they're basically doing really sort of nominal tasks that, like, it's really not much of a test at all. And so, you know, this was sort of a big slap in the face to the robotics industry. But there's obviously a lot of hope. Including Elon Musk saying, I'd encourage people to look beyond the bumps and potholes of the road immediately ahead of us, lift your gaze and lift your gaze to the bright shining citadel on the hill. I mean, that sounds fancy, and I get it. Like, the idea is basically like, hey, if you're, you know, you like Tesla, then you should believe in robotaxis and an autonomous future and Optimus. Problem is, I also agree with people in that Tesla would be so well positioned right now if we were selling these mass affordable $25,000 cars while at the same time doing robotaxis, which I think will take years to scale. And this idea that, well, because we're using vision, we can scale faster, that's great. But even if we do accomplish rapid scaling, which is not likely, but even if we did, this idea that demand is going to keep expanding for robotic rides, basically, and keep the money that people are willing to pay at 50 cents per mile, to me is kind of ludicrous. I think what will happen is taxi fares will plummet, and running Optimus or running robotaxi businesses will actually become a very low margin business. So what I would rather see Tesla do, what I think is a much higher margin business, is manufacture and sell robotaxis and manufacture and sell Optimus robots. Actually operating the network I don't think is that brilliant. Mind you, you also need the charging infrastructure for these cars if you expand this, and you know, cleaning infrastructure or otherwise, customer service and otherwise. So while I'm hopeful, I see Tesla as one of the most great American manufacturers, and I really hope that we can get back to just make and sell good stuff. Again, I like the Cybertruck. I just wish we would take these skills and focus on the Model 2. Unfortunately, and I hate to say this, because I don't want to sound like, you know, some like Elon hater or whatever, I think the Model 2 was basically ignored because Elon got distracted. You know, he got distracted with X, he got distracted with politics, he got distracted with, you know, I don't know, probably XAI to some extent. Actually, probably a lot of extent. This has consumed Elon's last 3 years. And I think he gave up a lot of Tesla moat because of that. So I'm a little bit disappointed by that. I'm not so worried about Chinese competition, mostly because we don't really allow the importation of Chinese vehicles, so I'm less so worried about that. Somebody else here writes, also humanoid robots require advanced semiconductors for sensors. You need, yeah, I mean, fine, yeah. Robotics and AI merge in 4 to 7 years. It may need quantum computing. There are a lot of thoughts about how long robotics will take. It'll take a while. And this is why I think purpose-built robots, like a company such as Symbotic takes advantage of now, is one of the reasons why some of these robotic companies can really take off at a substantially lower valuation. In part also because Tesla's valuation is not cheap right now. Now, I started pitching Symbotic when it was trading for like a 1.3 peg or something very low, because I like to be very valuation-based. It's more than doubled since then, more than doubled, which is great. It's a wonderful thing, and I'm happy for everybody who invested in it. Remember, you can go to meetkevin.com and get your alpha. But let's take a look at the valuation on Tesla right now. So if I go look at Tesla and we grab a current, we've done this before. It usually trades above a 3.5 to 4 peg. But let's do a current, 315 divided by 1.87. It's trading for 168 times forward price to earnings. So that would be the end of 2025. And let's assume growth, which I think is high, but assume growth of 40% just to make it simple. We're at a 4.2 peg. 420 peg? Let's go. So anyway, those are just some thoughts on Tesla. Hopefully that's insightful.
Bullish catalyst.
Kevin is very talented, but I don't know if it's going to be him, but he's a very talented.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.